Hello guys and welcome back to our next lesson. Hope you will enjoy it. In the last lesson we talked about forks, lots, pips, spread and swap. Today we will be talking about the other markets where you could start doing trades. We will be talking about stocks or shares, about commodities, indices and about the cryptos. The stock market. The stock market refers to public markets that exist for issuing, buying, and selling of stocks that trade on a stock exchange or over the counter. Stocks, also known as equities, represent fractional ownership in a company, asset, or security, and so the stock market is a place where investors can buy and sell ownership of such investable assets. An efficiently functioning stock market is critical to economic development, as it gives companies the ability to quickly access capital from the public. How stocks are traded, exchanges and OTC. Most stocks are traded on exchanges such as the New York Stock Exchange or the Nasdaq. Stock exchanges essentially provide the marketplace to facilitate the buying and selling of stocks among investors. Stock exchanges are regulated by government agencies, such as the Securities and Exchange Commission in the United States, that oversee the market in order to protect investors from financial fraud and to keep the exchange market functioning smoothly. Although the vast majority of stocks are traded on exchanges, some stocks are traded over the counter, where buyers and sellers of stocks commonly trade through a dealer or market maker who specifically deals with the stock. OTC stocks are stocks that do not meet the minimum price or other requirements for being listed on exchanges. OTC stocks are not subject to the same public reporting regulations as stocks listed on exchanges, so it is not as easy for investors to obtain reliable information on the companies issuing such stocks. Stocks in the OTC market are typically much more thinly traded than exchange-traded stocks, which means that investors often must deal with large spreads between bid and ask prices for an OTC stock. In contrast, exchange-traded stocks are much more liquid, with relatively small bid-ask spreads. Stock market indexes. The overall performance of the stock markets is usually tracked and reflected in the performance of various stock market indexes. Stock indexes are composed of a selection of stocks that is designed to reflect how stocks are performing overall. Stock market indexes themselves are traded in the form of options and futures contracts, which are also traded on regulated exchanges. Among the key stock market indexes are the Dow Jones Industrial Average, Standard & Poor's 500 Index, the Financial Times Stock Exchange 100 Index, the Nikkei 225 Index, the Nasdaq Composite Index, and the Hang Seng Index. Commodity futures trading. Commodity futures trading is an often overlooked investment arena. There are a number of reasons for this. First of all, it's simply not an investment that's publicly touted as widely as stock trading and other more common investments. Commodity futures trading is different from stock trading, so it does require traders to learn how to handle investments in a different type of market. Also, many investors have been scared away from commodity trading by horror stories from investors who lost huge sums in the commodity markets. The truth is that while commodity trading is a higher risk venture than conservative fixed income investments or traditional stock trading, it is nonetheless a market in which it is possible to generate high returns that more than justify the additional risk. Understanding futures contracts. Commodity futures are traded in the form of contracts of a standardized size that expire in different months. This is obviously different from stock shares that have no expiration date and can be held indefinitely. Futures for a given commodity can usually be traded as far ahead in time as 2 to 3 years. However, the vast majority of trading nearly always occurs in the contract with the closest expiration date, known as the front month. Futures prices are more subject to sudden, volatile price changes than stocks typically are. A stock that has a long history of steady price appreciation or dividend payouts is likely to continue that trend. But with commodity futures, a downtrend in price can change to an uptrend literally overnight due to factors such as an unexpected freeze or drought during growing season. Futures contracts are divided into 5 main categories: agricultural futures, such as corn, wheat, orange juice, and cocoa; livestock futures, such as lean hogs and live cattle; energy futures, such as oil, heating oil, and natural gas; metals futures, such as gold, silver, and copper; financial futures, such as treasury bonds, stock indexes, and currencies. Cryptocurrency. A cryptocurrency is a digital or virtual currency that is secured by cryptography, which makes it nearly impossible to counterfeit or double spend. Many cryptocurrencies are decentralized networks based on blockchain technology, a distributed ledger enforced by a disparate network of computers. A defining feature of cryptocurrencies is that they are generally not issued by any central authority, rendering them theoretically immune to government interference or manipulation. A cryptocurrency is a form of digital asset based on a network that is distributed across a large number of computers. This decentralized structure allows them to exist outside the control of governments and central authority. Some experts believe that blockchain and related technology will disrupt many industries, including finance and law. The advantages of cryptocurrencies include cheaper and faster money transfers and decentralized systems that do not collapse at a single point of failure. The disadvantages of cryptocurrencies include their price volatility, high energy consumption for mining activities, and use in criminal activities. Cryptocurrencies are digital or virtual currencies underpinned by cryptographic systems. They enable secure online payments without the use of third-party intermediaries. Crypto refers to the various encryption algorithms and cryptographic techniques that safeguard these entries, such as elliptical curve encryption, public-private key pairs, and hashing functions. Cryptocurrencies can be mined or purchased from cryptocurrency exchanges. Not all e-commerce sites allow purchases using cryptocurrencies. In fact, cryptocurrencies, even popular ones like Bitcoin, are hardly used for retail transactions. However, the skyrocketing value of cryptocurrencies has made them popular as trading instruments. To a limited extent, they are also used for cross-border transfers. Blockchain, central to the appeal and functionality of Bitcoin and other cryptocurrencies, is blockchain technology. As its name indicates, blockchain is essentially a set of connected blocks or an online ledger. Each block contains a set of transactions that have been independently verified by each member of the network. Every new block generated must be verified by each node before being confirmed, making it almost impossible to forge transaction histories. The contents of the online ledger must be agreed upon by the entire network of an individual node or computer maintaining a copy of the ledger. Experts say that blockchain technology can serve multiple industries, such as supply chains, and processes such as online voting and crowdfunding. Financial institutions such as J.P. Chase & Co. are testing the use of blockchain technology to lower transaction costs by streamlining payment processing. Types of cryptocurrency. Bitcoin is the most popular and valuable cryptocurrency. An anonymous person called Satoshi Nakamoto invented it and introduced it to the world via a white paper in 2008. There are thousands of cryptocurrencies present in the market today. Each cryptocurrency claims to have a different function and specification. For example, Ethereum's Ether markets itself as gas for the underlying smart contract platform. Ripple's XRP is used by banks to facilitate transfers between different geographies. Bitcoin, which was made available to the public in 2009, remains the most widely traded and covered cryptocurrency. As of May 2022, there are over 19 million Bitcoins in circulation with a total market cap of around $576 billion. Only 21 million Bitcoins will ever exist. In the wake of Bitcoin's success, many other cryptocurrencies, known as altcoins, have been launched. Some of these are clones or forks of Bitcoin, while others are new currencies that were built from scratch. They include Solana, Litecoin, Ethereum, Cardano, and EOS. By November 2021, the aggregate value of all the cryptocurrencies in existence had reached over $2.1 trillion. Bitcoin represented approximately 41% of that total value. Hope you like our video. For more videos about the investment and the strategies on the investing, start to follow us and subscribe on our YouTube channel. See you in the next video.